Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Warmpup Ventures, a founders-led fund, has launched its second fund with a corpus of 300 crore rupees. This fund will focus on deep tech, climate and sustainability and plans to invest 5 to 7 crore rupees each in 25 to 30 early-stage startups across sectors with a significant provision for follow-on rounds.
Electric ride-hailing and charging infrastructure network Blusmart has secured 100 crore rupees in EV financing under its asset leasing initiative. The Assure by Blusmart initiative surpasses 100 crore rupees in book value within its first year, along with a 10-fold increase in monthly financing and 25-plus partners.
MSME lender iFinance files its DRHP to raise 1450 crore rupees through an initial public offering. The proposed IPO to include a fresh issue of equity shares worth 885 crore rupees and an offer for sale component of 565 crore rupees.
Re-commerce marketplace for refurbished electronics Cashify is on track to profitability for the fiscal year ending March 2024. Cashify reported a revenue from operations of 935 crore rupees, a 14.5% increase over the 817 crore rupees it recorded in FY23.
Paytm shares rise for the third straight day, even as it remains 50% below its IPO price. The lifting of the ban to onboard new UPI customers and the stake sale in Japan's PayPay Corporation boost the sentiment. Well, those were the headlines we've been tracking for you this evening on What's Brewing. Jaipur-based furniture and home decor brand Wooden Street has raised $43 million or 354 crore rupees in Series C funding. The round was led by global investment firm Premji Invest, marking this as one of the largest capital raises in the home and furniture sector in recent years. To talk to us about the road ahead at Wooden Street, joining me now is its co-founder, Dinesh Pratap Singh. Dinesh, welcome to Startup Street. With Premji Invest coming on board, how are you now poised to redefine how India experiences furniture? What is the kind of impact you hope to make with their backing? And apart from funds, what do they bring to the table?
Yeah, so thank you so much. And we are really excited to have Premji Invest on board. Premji Invest, as we know, is one of the largest, probably global, one of the globally largest PE funds who are invested in Wooden Street. And it shows the confidence which global investors have in the startups who are from cities like Jaipur or tier 2 cities who are doing well, focusing on customer needs and building a sustainable business. And Premji Invest not just invested and supporting us financially, but they are going to provide excellent strategic support in terms of improving our operational efficiencies and helping us navigate through this crucial phase where we are going to build a large-scale business, probably 1,500 crore in turnover in coming 3 years' time.
Dinesh, you operate on a company-owned, company-operated model and have a network of more than 100 experienced stores across the country. Now, with this fundraise, you plan to open new stores in Tier 1 and Tier 2 cities. How many stores are you looking at, by when? And also, how big is the Bharat opportunity for you?
So currently we operate in around 100 company-owned, company-operated stores. And with this recent funding, we plan to take this number to 200 in next 18 months. And in next 3 to 4 years, we will reach up to 300 stores. Now, today, 80% of our stores are in Tier 1 cities, which are metros. But with this new funding round and the new surge of expansion, we plan to cover, Tier 2 and Tier 3 cities, where we are seeing very promising leads and newer markets getting built up as Indian consumers from Bharat, which we all say, are aspiring towards, trendy furnitures which are affordable and functional. So that's our plan.
Huge opportunity for you, clearly. Dinesh, you also aim to diversify your product portfolio and strengthen your supply chain. If you could elaborate on each of these plans, any new offerings in the pipeline that you can talk to us about?
Sure. So we started as a core furniture player, mainly working into solid wood. Over the years, we have expanded our base into non-solid wood, which is particle board, engineering wood furniture. Going forward, we will continue to strengthen that vertical. We are also planning to, or very soon, we are going to expand into fixed furniture, which is modular kitchen wardrobes, along with aligned categories like mattresses, recliners, space-saving furnitures. So there's a whole lot of categories or adjacencies where we are working towards expanding the product base.
All right, lots of new categories there. Dinesh, take us through your current manufacturing capacities. What are they, and what is the expansion plan on that front? Also, what are your top selling products?
So today we have 5 manufacturing units, mainly concentrated in North India in Jodhpur and one unit in Bangalore, with a total area under cover of around 15 lakh square feet. We want to double this up very soon with expansion of manufacturing capabilities in North, in South, and probably in the East as well. So that's the plan on manufacturing. And in terms of product selections, bedroom and living room make up almost up to 50% of the sales which we have. But now we are building more capabilities towards kitchens, dinings, and other areas as well.
All right, Dinesh, for the fiscal year ending in March 2024, Wooden Street reported more than 260 crore rupees in revenue, while its losses stood at only 10.9 crore rupees. What is the road to profitability looking like?
So, we have been very conscious and we have balanced, growth with profitability over the last 3 to 4 years. So while we have achieved a very sustainable growth of 40 to 45%, on profitability levels, we are very close to the break-even levels. So we will continue to focus on, the current levels in terms of profitability, near to or very close to the break-even level.
Okay.
And then once we achieve the scale, which is around 1,500 crores, then probably we will start focusing more towards, making it profitable in double digits EBITDA.
Okay.
But for now, the focus will be between 0 to 5% EBITDA.
All right. One final question, if you could quickly answer. What are Indian consumers looking for, Dinesh? What are the new trends you're seeing? And how do you plan to continuously evolve so that Wooden Streets meets diverse needs of consumers today?
Yeah, so over the last 9 years, we have seen it all. I mean, consumers from mainly offline to now showing a trend of a lot maturity on buying from omni-channel businesses like us. So we continue to see that, Indian consumers aspire to, get furniture in quality, which is similar to what they can get in any other developed countries. So aspirational furniture, trendy furniture, space saving is one of the important criteria which we are seeing has been focused. And lastly, sustainability is also coming in picture,
Sure.
where a lot of customers are already concerned about, from where the woods are procured, how sustainable is the furniture. And
Yes.
as a company, we are very committed, to provide sustainable solutions only. So that's
Okay.
how we feel the consumer will continue to evolve.
All right, Dinesh, it's time for me to wrap up our conversation. But many thanks for joining us on Startup Street, and wish you the very best with all your aggressive growth plans.
Thank you so much. A pleasure. My pleasure as well. Thank you.
Moving on, Bangalore-based diagnostic startup Orange Health Labs has secured $12 million in a funding round led by the Amazon Samba Venture Fund. The round also saw participation from existing backers like Accel, General Catalyst, Bertelsmann India Investments and Y Combinator. The latest investment brings the company's total funding to $47 million. The company offers diagnostics directly to customers' doorsteps with bookings available through the website or app. Joining me now to discuss this further is Tarun Bhamra, the co-founder of Orange Health Labs. Tarun, thank you so much for taking time out and being here with us on Startup Street. The Indian diagnostics market has now become highly competitive, with the more established players having a large foothold, right? So how are you making a mark for yourself and staying ahead of competition and grabbing a larger market share?
Thanks for the question, Arundhati. Thanks for having me. I think diagnostics market in India is still at its nascency. I think irrespective of COVID for the last decade, this market has been growing at 15% annually. And we believe that in 2035, this market would be close to $40 billion. Now, in such a huge potential, the largest player even today is just $200 million. So the upside is huge. Right. And I think this market is going to significantly consolidate under regulatory pressure as the demand for quality goes up. More complicated tests are demanded, so the local players will give way to brands. Within the brands, I think Orange Health has a unique proposition for being the India's first on-demand at-home diagnostic lab. The fundamental insight over here is essentially that the incumbents are largely designed to have a franchisee network near your home or near your doctor's clinic. Orange Health is designed for being in your home and in your doctor's clinic. And it is available on demand. It's available for the longest hours till night 10 o'clock. And we are able to service our patients within 60 minutes and give reports within 6 hours. At the end of the day, the patient doesn't want diagnostics. Patient wants treatment. So sooner they get the result, happier they are. So a company which is fundamentally designed for not delaying the result, not batching the results, but giving them real time is likely to have an advantage.
Right. And you've raised this $12 million. Can you take us through how you plan to use these funds? Any, sort of new offerings in the pipeline?
Absolutely. So, of course, we are currently serving top 4 cities. A lot of the money will go in geographic expansion as well. But the thrust of our focus will be essentially on expanding our test menu and giving our consumers a very wide, a high-end test variety so that the basket of tests are complete for them. More importantly, we have recently launched a new set of capabilities like doing ECG tests at home. So we will give ECG, pulmonary function test, X-rays. A lot of these additional tests will be brought to the patient's home so that they don't have to leave their homes for getting these tests done. And finally, more importantly, we are also now expanding our retail footprint because we want to offer, in addition to blood tests, also radiology capabilities and scan capabilities to our patients. So ultimately, Orange Health is going to be the one-stop shop for the patients to get integrated diagnostics. So they can get both scans, radiology, as well as blood tests done as quickly as possible.
Right. And, if you could sort of talk to us about your presence, how many cities are you currently present in and how many cities do you want to expand into? Are tier 2 and beyond cities on the radar at this point? Take us through, the opportunity you see here.
So expanding to entire country is a huge opportunity, surely, but ours is a business that demands some certain degree of focus and execution rigor. Unlike other consumer-focused companies, healthcare is a very critical business to get right at every step. So we will be expanding from current 4 cities to next 12 cities. That will be our immediate focus. I think beyond that is a little step far ahead. So we want to go deep into these 12 cities and provide the best possible service to our patients. Because fundamentally, blood testing is kind of complicated because we have to get quick commerce right two-way. Not only do we have to reach you fast, we also have to ensure that the blood moves back to the facility faster. So it's like building Uber 2 times over, essentially.
Right. So you essentially have like this omni-channel strategy that you just told us about. You have like 8 offline centers currently. By how many do you hope to increase this? And what's the short-term target? What's the online-offline revenue mix at this point?
So in today's market, 5 years ago, pre-COVID, only 5% of market was online and 95% was offline. Today, that is substantially grown to 15% online and 85% offline. For Orange Health, of course, 95% of the business is online. We are currently at 8 centers. We want to expand to 30 centers by end of this financial year. And then within the next financial year, we expect to be at around 100 centers in our cities. The idea really is to introduce our brand to consumers who are still offline and help them come from offline to online, because what we realize is once a consumer experiences that, they are not going back to the offline solution. But it is important in healthcare for consumers to get comfort that this is a real facility and it's a neighborhood medical facility. So they get that psychological comfort about saying that, okay, this is, Phygital essentially gives them comfort about the digital service itself. So towards that end, I think having omni-channel presence is very important. Second, of course, like I said, the omni-channel strategy will help us introduce certain amount of radiology tests, which will complete the basket for our patients.
All right. So you've also achieved 100 crore rupee annual revenue run rate, and you claim to have turned profitable in Bangalore, right? So can you take us through the targets for this year, and when will you turn fully profitable?
So our focus is, we have always grown profitably and not through discounting, essentially, right? So our primary way of gaining market share has been through giving exceptional service. We are the highest reviewed lab in the country with 20,000 reviews, 4.9 plus rating across all 4 cities, and that's our differentiation. As a result of this, we have grown 100% year on year for last 2 years. And we intend to maintain that pace for the next year as well. So within a year, we intend to be at about 200 crore rupees annualized revenue run rate. Profitability is within reach, we believe, within 3 years' time. Most of the diagnostics company in India have been able to hit IPO at about 500 to 600 crore rupees revenue run rate mark. So we hope to get to that number in about 4 years' time. So hopefully we will be trying to get to the markets by then.
All right. So in 4 years' time, you also might be looking to get to the markets. All right. Thank you so much for joining us on Startup Street, and we wish you all the best on this journey going forward.
Well, we're going to take a short break, but up next, climate tech startup Sustainiam has raised $1.45 million in a pre-Series A funding round. We'll speak to the founder and CEO on the other side of this break. Well, climate tech startup Sustainiam has raised $1.45 million in a pre-Series A funding round that was led by Oreos Venture Partners. Founded in 2023, the company aims to disrupt the $700 billion global carbon market with its fully digital platform for environmental assets. The capital is also going to be used to enable the startup to double its headcount and expand operations globally. So joining us today is Sapna Nijrawan, who is the founder and CEO of the company, to discuss how this funding is going to help propel their journey. Thank you very much for being here with us. The global carbon market, you say, is valued at over $700 billion, but it relies quite heavily on traditional OTC methods. Tell us about how Sustainiam is disrupting the market and why this fully digital platform is needed.
Absolutely. Thank you so much for having me. And as I said, that being a $700 billion industry between voluntary and compliance market, it is still reliant on OTC mechanism and bilateral trades. What Sustainiam is doing differently is we are digitizing how stocks market were probably digitized from a dematerialization mechanism and building a repository and further into an exchange. We are the first platform in the world to build a digital registry and connecting with the repository and along with an exchange. At the moment, there is no exchange in the world, and we are going to be the front leaders to have a fully digital settlement process through our platform.
Well, Sapna, this $1.45 million that you've raised in the round, what will be the immediate priorities? And could you share more about the launch of what you call will be the first digital environmental asset exchange and the roadmap for scaling your operations globally?
So the funding is going to help us to hire the right resources and also launch our first 3 products, which are going to be the repository, exchange, and the registry. There is absolute big amount of documentation which has to be digitized. The roadmap for building this exchange is going to be within the next 4 months. We are going to go live with the first version, which is going to be a global version for renewable energy and waste to energy projects to be digitized through our platform.
All right. Well, Sapna, let's talk financials. You hope to generate about 70 crores in revenues and double your team by 2025. What revenue streams or monetization model is going to drive this growth? What are the current revenues and are you profitable yet?
So we have already onboarded more than 72 projects who are going to generate over 300 crores of assets over 5 years. And we are in terms of adding projects, as well as we are doing a trading mechanism through our platform at the back end. We see these numbers to be absolutely achievable within next year. And the roadmap for having this platform for the digital registration is through bringing supply through our platform and building these assets through our platform itself.
Well, 300 crore roadmap for the next 5 years, but a lot of that is going to come with you getting new clients as well. You know, you've got Coca-Cola, ITC, Brookfield in this short span of time since you started last year. What do you think makes Sustainiam an attractive partner for an enterprise? Are you seeing a growing demand globally as well for carbon management tools?
So the foremost thing is for projects like Brookfield, they really reliant on consultants and working with multiple consultants to have this digital registration and asset registration. The biggest turning point was that these projects could not hold their own credits and had no visibility to trade in the market, making the market absolute opaque in the industry, having a margin from anywhere between 5 to 95%, leaving at the consultant table itself. And that's what we are disrupting in this market. We allow our customers to hold their inventory within themselves and then further trade through the platform with a limited arbitrage and having full discovery on pricing mechanism. The ownership itself is the biggest driving factor from our platform, that they have full control and ownership of their own assets, and that is limited in the market at the moment.
All right. Keeping that in mind, before we let you go, Sapna, given the evolving regulatory environment as well for carbon markets globally, what are the challenges that you anticipate and how is Sustainiam positioning itself to stay compliant and ahead of the curve?
The challenges in the market is that at the moment, there is no data tracing on companies having their emission, and also furthermore in the supply chain. The government has to take actively and proactively form schemas and mechanisms where they can record their emissions and then further make them compliant. We are heavily reliant on emission factors and emission schemes and policies to be in place. The world is changing. More than 80 plus countries have already designed them. India is at the forefront to design and launch their own schema by next year. And since us being a global reliant platform, we are participating in markets like US, Europe, Middle East, and even Southeast Asia. India being one of our biggest bucket for revenues as well. The risk for this market is limited to be around policy and adoption in the future. We see that adoption has to come around gathering data, and data is going to be the key for this market.
Well, data is going to be the key for the market, and you've laid out the roadmap for us. Sapna, thank you very much for joining us here on Startup Street, and we wish you the best with this venture. Thank you.
Thank you so much for having me.
And with that, it is a wrap on this edition of Startup Street. From Shruti, Ritu and I, goodbye and many thanks for watching. More news and updates continue right here.